China stimulus, slowing global growth, geopolitical tensions, they continue, and Aussie mining stocks, well, they have had plenty of tailwinds, but there are also headwinds too, of course. Let's take a look at what's going on and some specific stocks in those sectors. Shawn Hickman joining us from Market Matters. Shawn, good to see you.
Nice to be here.
Looking at the market at the moment, it's looking pretty positive, isn't it? Because we've seen 4 straight sessions in the green in the US. That comes ahead of that key inflation read tonight.
Absolutely. I think we've seen a fair bit of squaring off. And the market's underweight. The market's in cash. The market's bearish. We've seen those moves. We actually saw the VIX up last night, almost 5%. So people are buying insurance both up and down. Strong move into the CPI. Room for disappointment. Room for upside. My gut feel is the market wants to go up.
But can go down, as we know. So what, are you feeling perhaps we're past the bottom then? Is that the sense you're getting, or at least that's what the market is telling you?
I'm migrating that way, slowly but surely. We're looking for opportunities to buy the market. We have been for a while. So we're slightly elevated cash positions than we normally would carry. But we're looking for areas to buy the market, different sectors to buy into stocks as always. The quality end of town is where we like to focus. But the market, I think, has gone too far. I mean, the Nasdaq has fallen, I think, 34% from its high. It's bounced a few times. It's tried to rally a few times. I think we're seeing some value coming back in the equation. And what's new? Inflation's up, inflation's strong, interest rates are going up. So where's the new negative news coming from?
Before we talk stock specifics, how do you look at the Australian market compared particularly with the US in terms of value?
It depends on the stocks and the sectors, to state the obvious. And we haven't got the tech dominance that the US has. So we didn't fall as far as they did. We haven't rallied, or we might not bounce as high as they do. But conversely, I think we've got a better backbone. Our banks and financials seem more solid. Resources are strong. As long as China doesn't turn off the tap and go for COVID zero forever, I think the resources look quite good. So I think overall, from a value perspective, we will outperform the US for a while longer. I'm more comfortable buying stocks here, but there are some really good quality stocks in the US that I would never turn my nose up at.
Such as?
Well, such as Apple this week. They called me out. Made me look silly. I thought their new phone was just a new camera and people wouldn't go out and buy it, and I was wrong.
You underestimate particularly the young'uns out there who they will go for a new product as soon as it appears. So that's
my 11-year-old son. I agree. My 11-year-old son as well. But at the end of the day, a phone baffles me because you can't really see what sort of phone it is.
Yeah.
By the time they got the cover on it.
All right. Well, let's come back here then and see what your focus is at the moment. You're looking for that quality. You're looking for the value. And I notice the ones you've given me are resource stocks. What are you looking at the moment?
Well, we're seeing a few people ask us the question a lot over the last couple of weeks. Is it time to switch from coal to iron ore? Obviously, coal's had a great rally. We've seen the likes of Whitehaven Coal up well over 200% this year. New Hope up about 150%. But we've seen the likes of Rio, Fortescue down this year, before we take into account strong dividends, of course. So, I think it's a good time to have a look at these stocks and wonder whether people should still be all in long coal, or whether they should be looking to migrate a bit of risk over.
All right, let's just examine coal then. You mentioned Whitehaven and New Hope. So yes. What you feel as though perhaps they're past the peak as far as where those coal prices are?
Well, I just think they're very volatile stocks. I mean, in the last, 15 months, we've seen the likes of Whitehaven go from $1 to $9. It's a pretty good rally, but it's pulled back 20, 30% a few times. It gives you opportunities to get in. So would I be chasing it up around $9? The answer is no. Would I put my hand up between $7.50 and $8? The answer is yes. So short term, we're still happy buyers of coal, but we're into weakness. We think there's a good chance of a pullback in that sector.
All right, New Hope?
Very similar, back around that $5 mark. Be quite keen to buy it under $5. I do stress, of course, that we've thought that before and they've kept on going, but they do have a habit of pulling back. So I think it's time to be patient with coal, not to be chasing it.
All right. So to follow through what you were saying earlier, then you're more likely to perhaps trim there and pick up some of the big iron ore miners.
I think it's a situation that comes down to your time frame. If you're looking back 12, 18 months out, if you're a long-term investor, I probably wouldn't bother. I'd probably stay as you were. But if you're looking more 3-6 months, and you've got to understand at the moment, we're in a very volatile market where moves that would normally have taken a year or two to unfold are unfolding in 3 months, sometimes less. So right here, right now, I think into Christmas, the iron ore miners might well outperform. We've got a lot of bad news built in the market for China, a lot of bad news built in around the iron ore miners. They've come down a long way, and I think they could easily bounce from here.
So much of that, though, will be dependent on the Party Congress in China, though, and as you say, as to whether they maintain that zero COVID policy and how that obviously plays out, particularly as far as construction in China is concerned.
Totally. But it comes down to risk reward. You've got a population there that have been locked up, or locked down, I should say, not locked up. And at some point in time, China's going to want to start kicking things again. They've already cut a few interest rates around the edges. They're going to want their economy to start moving forward. They can't stay locked up forever. So I think we're going to have to just look at the risk reward, look at the value on the stocks and say, okay, they've come down so far. Is it time to start accumulating or nibbling on the back foot? Just like, is it time to take a bit off the top with coal? Because if we see some sort of improvement in the Ukraine situation, we could foreseeably, 6-12 months' time, see some Russian coal come back in the market.
All right, well, let's bring up a couple of charts then. Let's start with BHP, what you're seeing there, those price levels and just in terms of value.
I put BHP in there because it remains our preferred play to the resources stocks. I know it's diversified, it's not pure iron ore by any means, but we're long BHP, we're holding a very good holding in BHP, and we prefer it to both Fortescue and to Rio. So I haven't just gone with the pure iron ore plays.
Why? Because it's of its diversity.
Diversity, I think it's just a better company. It's
Right.
performed better both on the way up and the way down. So that, by definition, is not a bad way to be positioned.
All right, well, let's take a look at Rio then, what you're seeing.
Rio made a new low for the year last week. It's bounced quite well. I just think the next 15-20% could easily be up in Rio. So from a risk reward point of view, we haven't held Rio. We've been bearish Rio for a while. We've said it's not a stock we want to own. I would change that stance now and say we're neutral to slightly bullish Rio.
Okay, Fortescue, lower quality iron ore. Is that perhaps the reason why you're not looking at it at the moment?
I just thought I'd keep it two stocks. That was
Okay.
the main reason I didn't include it. But it was very similar to Rio.
Yeah.
Very, very similar to Rio. We've been, leave it alone. It's a bit too hard at the moment. Iron ore, we didn't like the supply-demand side of the equation. We think now, as you alluded to, obviously China's the dominant factor here. But we think there's a lot of bad news already built in the price. Down in these levels, we think the risk-rewarded favours to start nibbling on the buy side.
Okay, let's just round it out with how you're looking at gold at the moment. I think I asked you this time last week. You were looking fairly favourably at that. There's a lot of chatter this morning, given the gold price is starting to move up. I mean, critically, it is largely dependent on where the US dollar, and of course the US dollar has come back in the last couple of days. So you maintain your positive outlook on those gold stocks?
I think so. I think the risk reward towards gold looks good. I wish gold had moved like silver did last night. Silver had a great night.
I was about to ask you about silver because, but it's hard to actually find a pure silver play, isn't it?
It's almost too hard.
Yeah.
But it gives you a good read through on the gold stocks and what they tend to do, just in a much softer manner. But we feel that the US dollar, maybe not against the yen, because that can't take a trick at the moment, but the US dollar, risk reward wise, I keep using that phrase, I think the US dollar's run its race and it needs to have a rest. And that should help, should see gold, we think, rally at least $100 an ounce from here.
But just to reiterate perhaps what you said last week, you're looking at the producers, not the explorers.
Totally. Just keep it simple, stupid was a phrase I also used last week. You know, Newcrest, I mentioned it, we hold it. It disappoints me every time I look at it. Yeah. But maybe if I didn't have a position today, I might look at Northern Star ahead in Newcrest. But we hold Newcrest, so I think we're going to stick with it.
All right. Well, in fact, I can tell you that they are both up today. In fact, let me take a look. We're seeing Newcrest, it's up around 0.25%. Northern Star up close to 3%.
Nothing new there.
Yeah, right.